so our third speaker is Kobus. Kobus is the chief economist at Roeder & Associates. He's going to tell us a little bit more about Roeder. So Roeder's been around for a very, very long time. I'm sure many of you know Irvin Roeder. He was on the radio quite a bit. And Kobus is now the chief economist, so he's the number one economist in the team. And we've been part of the Roeder panel for over 10 years as well. They've got an incredible report they give out every quarter with very valuable insights on commercial and now residential market recently. So Kobus, I'd like to welcome you up to the stage.
Job, thank you very much. I must say it's great to be here. Great to be here safe. I actually live in George, so it was a loss. I had 2 weeks, 2 storms and 2 presentations. I was actually in Cape Town last week as well. So yeah, managing the flights and everything. Last week I avoided the Wednesday was the worst day in George, and then I had to move my flight to the Tuesday. And this week was sort of deja vu because it was like here, all the trees running into the roads and the roofs and solar panels in the yards, and it's the same in George. So yeah, I'm glad everyone can make it, and hopefully no real bad damage to anyone personally. So I'm going to talk about the property market and starting off the economy. That of course drives everything. And just a little bit about me, because I think a lot of you won't know me. So I'm at Roeder, as Jacques said, and I've been an economist for about 15 years. I started off as a mining economist in Cape Town. I lived in Cape Town for almost 10 years. And my first focus was a lot about commodity markets. Economist that trained me that time was Jacques Wood. Somebody might know me, he's quite old now. But yeah, my focus was on gold and iron ore markets, oil, fuel. Very relevant topic now. Copper prices, even costs, any cost that you work with, that's also applicable to property like your steel cost, aluminium, stainless steel markets. So my job was to analyze the markets, and because most of the things you look at the demand side, what's the demand for the product and what's your supply side. And for economists, you can work in any sort of industry, but my focus is now on property. But the real thing that I'm good at is understanding the markets, currency, bond yields, and commodities, and then I took that to the property market, because again it's the same, how much properties are being built and what's the demand for whatever you want to look into. So without further ado, I'm going to start off with just my agenda. So for you that's coming here, it's amazing, there's a lot of different people here, and I think it's an amazing group. There's attorneys, economists, accountants, a lot of people from property, and it's great to chat to everyone. So what you need to get from my side is the market view. I think that came out in one of the presentations. So because Jacques helps with the management of the property, getting the right strategy, making sure you understand. Actually, on like municipal board, I love what you said about the municipal in Tshwane, because I know my family in East London, for example, they also get these water bills. It's like 50,000 this month and then 15,000 now. And then I need to go to the municipality to sort that out. So it's an absolute yes, to sort that out. And then Christine spoke about the accounting side, the trust side, and a trust or companies, great lessons I learned there. For me, it's just a market view, what's happening to the economy, and on the property side. I'm going to delve first into the background of the company, then looking at the economic side, then looking at the overall view of the property market, and then going down to Cape Town. I'm sure that's what you want to know most about. Okay, so on Roeder, it's actually a very old company. It's 1987, started by Mr. Aaron Roeder. So he trained me for about, he's still working at Roeder, he's the chairman now, but if I call him, he says he's semi-retired, and these days he said he's retired. He still actually edits the publications that we publish. But yeah, he doesn't look at his emails frequently. And yeah, so Rhoda was rated the best property valuation company for numerous years in the TMR Africa. That's for various property types. So we're really well known for our office and industrial and retail research. And then we have done residential research historically, but we've expanded it a lot with our we actually had a takeover of the company, which I'm going to explain to you now. I'm going to give you that detail. But our flagship application is the Rhoda Report. Now, who has read the Rhoda Report here? Okay, actually quite a few people, I'm surprised. So I'm the editor of that report, so it's a report of over 200 pages. But in the older days, we actually had a book, the Rhoda Report book, that you actually had a hard copy, and then when brokers had that book, or owners, when they went to negotiate, they took that book and showed that this is what the Rhoda Report says. And I see some people nodding might remember that. So I was actually, I look quite young, but I actually was part of that, still having that version. We took it to the Bell printers, they came and they printed the book, and I was busy checking out those when I started the Rhoda. I was still in that phase. Then we just discontinued that because the Rhoda Report was posted to people, and the post office failing. People didn't get the Rhoda Report, or they only got their property report after a few months. So we stopped that, later we couriered, and with digitalization we got it online and everything. But that's our flagship publication. We also have other publications where we focus a retail report. We've got a lot of detail on shopping centres, rental rates, and also forecasting on what's going to happen to the market. Say up to 2030, and we forecast all these variables. We've got econometric modeling, all those kind of things. Yeah, but a big thing for Rhoda is we've got the same data, or we've got data from about 40 years back, and the way we get the Rhoda data is we have surveys that we send according to Jock and his team. They also complete these surveys, and we ask people, what is the office rentals in Sandton or Rosebank, Melrose, or there's over 20 office nodes in Johannesburg. Then do the same question in Cape Town, Centre City, Tiger Valley, Durbanville, Cape Town City, all these nodes, and we get the rental rates per grade. And our job as economists, the team, is to then calculate the averages, and we get a city average for Cape Town, and we get a South African average, and then my role is then to look at the data, try and get a picture, compare it to what's happening to the economy, interest rates, bonds, yields, and then write a story about what is the opinion of what's actually the state. The report says what's the state of the property market. That's the view we want to give in that report. But because we asked that same questions for that amount of period, for that long period, we've got all the data quarterly in Excel, and all the data is now online, so you can say, I want Sandton rental versus Rosebank, and you can then check it online. And we're continuing that process. I don't think there's anyone in South Africa that can match that. Arvin actually worked at Old Mutual, told me last week, he already worked at Old Mutual, and then he was I think he started as a broker, something, and then he moved, and then I asked him to create a property division at Old Mutual. He started that, and then he got, he tells the people he got fired because of some of the things he did, but he was some of the views he had, not bad things he did. And then from that, he created Rhoda. So, I mean, sometimes you move out of a position, somebody else told me this morning they were in a position, and then something new came from it. It was good. Good lesson for all of us. Okay, so let's go on. So, on the Rhoda history. So in March 2024, the Valuator Group acquired Rhoda, and the company was then split into two separate companies. A valuation company, Rhoda still retained the name Rhoda and Associates. So if you go on the web, they will get that website, not the website that I'm from. That's Rhoda Publications and Media. Now with this Rhoda publication, that's all those reports I spoke about, and we've added the media section. And the media section was actually voted the best property news website last year at the Spell Awards. So I don't know if you've been on that website, but there's a lot of news on the property companies and specific sectors. you can filter that in. But we're going to expand the media section a lot. We've made some acquisitions that's not public yet on that, but I'm also not allowed to tell you about it. But we're expanding a lot on the media side and the publications. We are bringing in a lot of tech. Let me get to the next slide. We need to get used to this stepping and moving the slides because I usually have to click that. But yeah, this is the journey we've been on since the takeover. I like to think of the whole route as certain ways of doing things, but with new investors coming in, there's a lot of new people. The valuation company and the research company now has got separate CEOs, CFOs, separate sales people. So it's totally focused. And Rita mentioned capital. I don't know if you guys know anything from them. They're very big in tech in South Africa. And they've invested quite a lot of money in Roda. And we've done quite a few things in this journey already up to now. I did mention some of it already. But we've got a lot of smart people in the company now that came in. Not to say that the people that were there. I'm fortunate in this nation where I was part of the old company and the new company. So I can tell those stories. There's not many of us. So it's an incredible journey we're on, very excited. I don't want to tell you about Roda the whole day, but that's just where we stand at the moment. And the economic background. Okay. So this is an interesting picture. Sort of tells the story of where we are now. It's very cold for the economy. It's sort of a tough situation with the war and fuel prices. The consumers are under pressure. There's clouds in the air, but it's green as well. It's raining, there's water in the dams. So you certainly we need to navigate from this level onwards. You'll understand the picture even more if I go ahead. So this is a picture. Okay, you might think it's me, but yeah, there's actually AI that got someone like me, I don't know why. So there's 3 doors that's closed. Can anybody tell me what they think this means? Think interest rates and economy, what's happened the last few months. Good job,
I've got the memo, so I'm
okay, but there's 3 doors closed. Any guesses?
Choices.
Okay, that is part of the answer.
Growth, recession, and stay as is.
No, not that, but could be part of it. Okay, so I think, choices, let's start with the choices. So it's 3 doors that's closed. Somebody's looking disappointed at it. Okay, and at the beginning of the year, the consensus was for South Africa that there's going to be 3 interest rate cuts. Not big ones, small ones, but 3 cuts necessarily. Because if you look at the background we've had, the economy is actually, it looks like it turned the corner. The economic growth is picking up. We had 1.1% growth last year. The previous year was 0.5. So it was, it's growth. It's slow growth, but picking up. There was expectation that it's going to grow more fast this year, and then the war happened. So with that ramification, there was a lot of news. People warning about diesel going to 40 rand a litre. People are scared. Okay, and what this has caused is that the door is closed on interest rate cuts. So the 3 cuts that were expensive at the beginning of the year, and that's basically closed now. And they might open the door maybe at the end of the year or not, but at the moment what the decisions central banks need to make, they are more cautious in what they want to do. They take a wait and see approach. They want to see how this inflation impact is going to filter through the system, if it's going to be temporary or if it's going to continue longer before they make a decision. So on South African inflation, for example, is that we've had the inflation target was usually the 6% level. That was sort of the 3 to 6%, and the midpoint was 4.5%. You know that they moved that target to 3%. Now what's changed with the war? Before the war, let me just go on to the slides. So before the war, the consensus view was that inflation is going to average 3.4% this year. This is a survey we also did, so it was the sample size of about 30 companies, and economists like Annabelle Bishop, Rockwood, they contribute in this data. But the consensus was that the inflation was going to be 3.4% before the war. What's changed now is that the economic projections, if you look at the IMF, the Bureau of Economic Research, I think it's the best in South Africa, they at Stellenbosch University, they see that inflation on averaging about close to 4% this year. It might actually overshoot at 4% already in the second quarter because of that fuel impact. But because of the new target of the Reserve Bank, they've got a 3% target now, they can play around the target. I say play around, but it's a flexible target. It's 1% to the top, 1% to the bottom. So it's, technically you can go up to 4 and to 2. But because it's getting to that 4% level and will probably go higher than 4% for the next few months. And it's got a lot of going to be headline news. And by the way, American inflation is 3.8%. Yeah, announced this week. So our their inflation rate is actually higher than us. So this is a global problem. I mean, even Australia had shortages of fuel. But anyway, getting back to the inflation point is that the Reserve Bank will have to then make the decision, okay, but they can't let the inflation run too hot. They need to be proactive and then probably look at a rate cut, sort of get that inflation back to where they want to be closer to that 3% target. So as we said now, probably a rate hike to the end of this month, unless if the war ends soon. Trump said last night on Bloomberg, yeah, he could end very soon, okay, but he said a lot of things. But one important thing that you must remember is that when there's a risky situation, especially now the war situation, you see that the dollar price goes up of oil, but it's also the risk because investors are scared. They react very quickly. It's informed investors. The rand also weakens in that same scenario. So, and because we import the dollar, we import in rand as well. So then you lose two times. So that's why we have this big shock. When the situation reverses, and it could reverse any time, that the war is going to end, then that oil there's going to be a huge drop in the oil price. Look, there's some serious damage from some of these infrastructure, so it will take a few months to just work out the system because they need to rebuild. There's a lot of damage. But the oil will reset and move lower and lower, and then the rand will also strengthen because that risk, they call it in economic terms, they call it the risk-on sentiment. And then the rand will strengthen again, so you're going to get score again on the fuel side when that happens. But for the moment, it's a tough time and we need to survive. So this is the consensus we had. So in terms of GDP, that's the second line. GDP growth was expected at 1.5% for this year, and then the prime rate 9.9. That was those three cuts that I talked about. Now what's changed is we haven't got the results of the survey yet, but I looked at the numbers that we did receive. So we're looking at GDP growth closer to 1%. So again, if you look at the news, it would sound like it's a terrible, but actually if you look at 2024, the economy grew at 0.5, 1.1% last year. If you're looking at 1.2, 1.3, it's actually not that bad at the moment, unless the war continues and the disruption continues for more months. So the prime rate, we're probably looking at 10.5% average for the year. By the way, that's still a lower prime rate average than in 2025. So, which, if you think of it, it's not that bad. But the main point I want to get across from this projection table, if you look at, I haven't got the latest number as I say, but these numbers from the people we've received yet, if you look 2028 to 2031, the projections haven't changed much. So the impact of the war is more, it's hitting 2026, 2007 to some extent, but after that the medium-term projections are still looking, it's still looking better. There's better growth that's going to be expected. And this is the forecast of the IMF and BR, very fresh in April. So you can see the blue and green bars there. Economic growth expected to pick up further and go up towards 2%. Electricity supply, that's a positive factor. The reforms by the government, getting the private sector involved with the port and rail. Even New Zealand is sending us wagons, can you believe that? So there's some things that the government is doing that's helping. The elections is a big risk, and what's going to happen with Ramaphosa now we've got Paula, he's still surviving. And then who's going to replace him? That's the big uncertainty next year. And will the person that is in charge, will it be more friendly towards the EFF and MK? That's the biggest risk, I would say, for the whole country. Ramaphosa probably, if he can get Mashatile out somehow, that would be, okay, don't quote me on this, but that would be, because Mashatile is also not, is not investor friendly. That's a good way to say. We don't want Mashatile coming in. Mabalula is also, his name is also in there, Kile Mabalula, and people will have opinions about him as well. So we need someone that steps in that is market friendly for South Africa. That creates uncertainty. We also have the municipal elections coming up, especially in the Western Cape. How would the DA will they retain the 50% plus? Will the Patriotic Alliance get a bigger share? They're doing well in some of the local by-elections. So that we also need to watch in terms of who's going to take charge. Now, everyone can take their view on what they think is going to happen with that elections, but it is a big risk for the property sector. That I don't think, there's not much factored at the moment in the financial market. It's going to be very bad. It's sort of status, continue with the status quo. If I go on with bond yields, again, one of the most important graphs I look at is this one. It's a 10-year bond yield for South Africa, of maturities of 10 years and over. And the last 2 years, you can say that South Africa environment has really improved. Okay, because you can say some economists, oh, that guy is very positive, or he's negative. But really, if you look at the data, there's been more investment in South Africa, and there's been more sentiment. You saw it in the rand coming down. I mean, it was up to 19. It's still in the 16s. There's still that improvement. If you look at the bond yield, the same thing. The bond yield, look how it improved from 11.5 to just about 8. That's a massive improvement. That's why your property companies on JSE has done so well. There's and it's also because the interest rates come down and there was expectations of more interest rate cuts. And then with this crisis scenario, so I want to call it a crisis scenario, with the war and everything, the bond yield actually hasn't gone up that much. You can see that with the red arrow. It's actually, if you look at the picture, it's actually not too bad. So if that bond yield spikes, these are us right, then you say that it's more worrying. Because this picture tells you that sentiment level. Same with the rand, what do investors think is going to happen? If you take the same graph, you look at the US bond yield, it sits at 4.4%. And the US bond yield is actually also creeping up. UK has crept up the last few months. Central banks globally, UK probably have to cut rates. They've got a crisis, it keeps on going. Eurozone interest rates also probably going up. The US, for the moment, the consensus is still there's going to be a sideways movement for the rest of the year. But there is that risk of it going up. Americans are very unhappy about the situation with the cost of living. Trump's actually got his worst approval rating at the moment. Yeah, so if you go on to the next one, on the listed property sector. So that is an option for investors as well. I know the rest of people here will be invested in physical property. But the listed property sector, it's mostly non-residential property on the JSE. So this is the South African listed property index. And it had a lot of trouble in 2018, that time the resilient but faithful, and then COVID came, terrible time. And then you can see the uptrend after that because people went back to offices wanted a couple of vacancies declined, your rental levels picked up. General improvement, same story of industrial, there was a recovery. So your interest rate has dropped the last few years and the fundamentals of the sectors started to get better and more people took on that risk approach and invested in properties. So if you actually bought listed property in 2023, you would have made a lot of money now. The returns was double digits. 2023, 2003, a lot of people probably were scared about that and we're going to buy it. So again, in the scary market, I always, because I also invest, you sort of, when everybody's scared, you need to start thinking, okay, where's the opportunities? And that is opportunity here as well in the Cape Town market. because there will be people now that want to sell, they're scared, they don't have the informed opinion, worried about what's going to happen. So there could be opportunities for people that want to take on that risk. Okay, but risk sometimes comes with, everything comes with risk. I think Jacques said it, so you need to be careful where you buy, etc. Anyway, good chart, shows an improving trend. Oh, and you can also see here that this impact of the war hasn't been much on the listed property. So, very interesting. Offices, I did touch it, so I'm getting more to the Cape Town focus now. You can see that the Cape Town office vacancy rate only about 6-7%. It's improved a lot over the last year. Comfortably the best in South Africa. I'm not going to give too much detail here, but most nodes in Cape Town are doing fantastic. V&A waterfront space, essentially City, Tiger Valley, Claremont. If you look at the rental levels, this is grade A rentals, so quite good offices. And you can see Cape Town rentals, the red line, it's just shot up. I don't know if you guys are aware, some of you will. But you can see also the other cities, there's also been a recovery, but it's been a lot slower. Okay. Next one. So industrial property, same chart, eh? If you look at the chart of Cape Town there, red is just shot up. I mean, there's a lot of properties, industrial, that's where the rent is 100 rand plus square meters already. Especially the new builds, so, because that also factors in the building cost, which has gone up a lot. Okay, going on, house prices. Okay, so we're going to start with the South African view, then go down to Cape Town, and then look at apartments as well. So the two indexes we look at is the F&B one. I consider that the base one in South Africa, and then the blue one is the limestone one. So you can see, notice in 2024, 2025, beginning of 2026, there's a strong uptrend. Most of the charts I'm going to show you, you'll notice that uptrend. Okay, but this again, the economists will say it's backward looking. I was in my 20s, my boss used to say it's backward looking, Kobus, focus on what's going to happen. So it's a positive story up to this period, that's up to March. And several metrics are showing improvement. You will actually be shocked at some of the things I'm going to show you. So drivers have been lower interest rates and decline of new housing supply. You can see that the building activity, this is the square meters of completed residential buildings in South Africa. The average since 2021 was about 5.5 million square meters. And COVID, it showed obviously a huge drop, and then it just stayed low. So I actually wanted to make a Cape Town one of this Western Cape one, but I just didn't have time. But I believe the building activity has also slowed down a bit recently compared to last year. But big drop in supply on the supply side of houses. First time buyers. This is a very interesting chart. This is the F&B survey. So they asked what percentage of buyers are first time buyers. And it went up to 40%. And yeah, it's quite crazy. So you notice in a tough period, this average was 12%. That was in 2008. So if it really gets to a crisis, that's the kind of levels we are looking at. I always, when I look at a chart, I sort of try to get a max level and minimum level, sort of an average level, and sort of get the feeling of it, because I look at a lot of charts. But if you look at it as a chart, it's scary that it looks a bit overstated, the rise in first time numbers, if you think of what's happening. So probably that will come down now because of the pressure that the households are feeling financially. Although one of the big drivers for the households is that your stock market, and the stock market hasn't retraced that much actually. If you look at American markets, it's the highest level ever. So even with the crisis. So yeah, some consumers will be on more. If you look at the buy-to-let chart, it's a similar chart. It's also gone up. The buy-to-let level is about 20% now, but it's not at the peak levels. The peak levels was 26%. And then your lowest reason to buy for buy-to-let was 6%. So that's also gone up. So there was a more sentiment, when we look at residential, non-residential or residential property, more positive sentiment towards property. The same kind of trends you'll pick up here, because you can see the mortgages granted is this red line in South Africa, and then your house price. You can see both gone up the last 2 years. That's the kind of recent trends I was talking about. Same chart here, FNB asks estate agents to rate activity from 1 to 10, and you can see that uptrend as well the last, since 2023. The activity level is about 6.3%. If you look at the Western Cape, the activity level is sort of up and down, and the last few quarters, especially since 2025. So it does look there is slowing down a bit, for sure, with uncertainty. It will probably go down a bit more. Although the prices hasn't showed that yet. I'm going to get to that now in a few slides. I'm going to also look at the time that houses on the market. So you can see that the time houses on the market is about 12 weeks there, and it's sort of stayed at the same level the last few years. It's lower than the long-term average, and not too bad. If you look at Cape Town chart, it's looking magnificent. The Cape Town, Cape Town, I say Cape Town, but it's Western Cape. But the Western Cape houses are selling about at 6 weeks, and was at 10 weeks in the first quarter of 2025. So there's been a massive improvement there, and it's come through the best of all the provinces. And most of the charts tell the same story as the Western Cape and Cape Town is doing fantastic stuff. Whether that will continue, that's going to be the question I'm getting to. Normally the house prices grew by 8% in the Western Cape in the first quarter of 2026. So it's been flattish growth. Last year it also was about 8%. But look at the other provinces, and it's quite. Look at Gauteng is sitting at 2-3%. Now, always when you look at the data, because I look at a lot of these, sometimes you get Northern Cape, Mpumalanga, Limpopo, so then sometimes they will be in second or third position, and they will read an article about on the next year, then it changes to another province. So there's no stability there. It's like an up and down story. But the constant has been that the Western Cape's been doing fantastic. There's a lot of reasons for the Western Cape doing well, and Cape Town, but I studied George, as I said. George is doing fantastic. It's booming. There's a lot of people moving there, even to the small towns, Rupert, Hartenbos, Stanley. Hartenbos got in its primary school, there's already 6 classes per grade. So it's a lot of young people moving that side. Same if you look at Nijna, Plettenberg side. So West Coast as well. So it's not only Cape Town, and that's important when you look at where you want to expand your portfolio. Then in last you've been in Langebaan and Eiserfontein. So there's been a lot of developments that side, with the new malls, the Nautica Centre in Langebaan, and all those developments next to the Cure. But there's a lot of examples like that all over the Western Cape. The common theme is that it's well governed, it's clean, and the Western Cape economic growth, if you look at a 20-year average and you compare it to South Africa, the Western Cape is growing about 0.3% faster per year compared to South Africa. So when I build a model, usually when it's a tougher time, I would even say that you can use a differential of 0.1, 0.2% that the Western Cape will outperform South Africa in a tougher period. And then when it's get better, you can go 0.3, 0.5 even per year. So remember that. If your government stays intact in the Western Cape, the national government is a friendly, I want to say, almost like a Ramaphosa-like, that's not going to partner with the wrong people. That sort of differential will apply, and your Western Cape investments should still perform. Then you need to start thinking about affordability and all which areas you want to invest, because the affordability is really, it's a lot of people talking about. Someone told me yesterday that a very high net worth individual, he wanted to move from Johannesburg to Cape Town, and he also said it's expensive for him. So then you need to start thinking, because usually I would say it's more lower income that want to move, and then they get maybe a lower paid salary, and then the cost of living is grind in a move, because we had a lot of people in George like that. So when we had that solar boom, there was a lot of people. Every second guy spoke out about it, said, no, he's putting up solar panels. Same with the building, there was a building industry boom as well for a few years. And a lot of those people, there were so many people that came, it was the same type of industry, and then there wasn't enough jobs because the market slowed. They had to move back, and rent was too expensive versus the income, they had to go back. So there's some people definitely moving back, many of us are staying, and we need to incorporate that semi-migration. What I think personally is that there's also a lot of foreigners moving to the Western Cape. I don't know if you guys seen that in Cape Town, but moving permanently to South Africa. So in George, I had a bride 2 weekends ago, there was an American at the bride and a Canadian that was permanently in South Africa. But yeah, the husband's a South African husband, so they got them back to the side. But the point is that there is some people coming, some foreign people buying, definitely coming in, and it's always the case. Not only the Danish people, but on foreign buyers in the Cape Town market, Cape Town is still perceived cheaper than if you have to go to London, Sydney, and all these places. So that demand probably will continue. There is some sentiment there when it's a risky environment that some of them will pull back. But look, the economy works in cycles, and it's not always bad. We're not actually in a recession now. So we're not in a recession. Let's be clear on that. There's a risk of a recession. People warning about it, but we're not in a recession. If oil goes 150, 200, listen, that's crazy. And if your inflation goes 6-7%, your prime rates, interest rate spikes, that's when we're going to get to a recession. Not at the moment. At the moment, in fact, it's reduced the oil price after oil flows, and that's great. It's a man-made, sad to say, but it's a man-made situation we're in. And some people say that Iran, I'm going off topic now, but yeah, it's very interesting to chat about. Yeah, so Iran, there's some people that say Iran wants to make the life difficult for Trump because the elections are coming, the midterm elections are coming up in November, if you knew that in America. So if Trump can be seen in a bad light the whole time, the Republicans are going to lose a lot of the votes, and ultimately we get more democratic people in charge in America, which will be better for Iran to negotiate with, because Trump is a hardliner, and that's an important thing to consider. So they're going this back and forth. They say they're going to have a deal with Trump, and they're going out, but what's happening in America? People are angry. $6 a gallon for gasoline at some places. Okay, so if you go on, metro level prices, again, Cape Town here sits at 8%. You can see Joburg, all the other metros are quite low. This chart is quite hard to find. FNB actually got suburb level data as well. They did have, but I asked them about it and they said, well, I can't give the reason, but they don't have a suburb level data for FNB anymore. So your other option is to get Lightstone. That will give you some prices per suburb. Well, they give what's doing well and not so well. I don't think they give the actual percentages. But this is the Cape Town index since 2000. Notice where we sit there, 100 index points, and we're seeing it almost 700 last year. So you can calculate what that increase is. That is quite crazy. But notice the common theme, the chart's going up a lot. Some periods slower. Some periods is very fast. If you look at this period here, that's the time we had a commodity boom. Everything was amazing. Yeah, a lot of the assets were growing a lot, double digits. And we had the crisis 2008, 2009. It was a bit of a dip, even in Cape Town. You can see there was a dip here in that period. That's where it really gets tough. And then there's been a few up cycles since then. The average price growth over this period was 6.1%. Now, from an economic point of view, you always want to compare your nominal gains, because this is nominal gains. Compare it to a deflator. So you can either compare it to your building cost, for your consumer inflation. Some other economists even use a HALET. You can use a HALET index. And compared to CPI, there was a real gain in house prices in Cape Town. No, it's not really a surprise, but not many places in South Africa will be able to say that. So we all know that there's numerous places in South Africa where you probably could have bought a place and had to sell at a loss if it was outside the Western Cape. Where to next? My gut feeling is that we probably have a bit of a slowdown in growth in the Western Cape. We're at 8%, but it's not a crisis at the moment at all. Because people are a bit scared, there's more uncertainty. Activity slow down a bit. If there's more changes internationally, the war goes on and it could get worse. But at the moment, there's no crisis level. So there will definitely be opportunities in this sort of I want to call it a short term this year. But over the medium term, that's it. The drivers that be driving Cape Town the economy, that's still going to continue. Okay, and apartments. I'm going to be very quick on this. Jock said he wants me to show the apartments. Because some people are interested in buying apartments. So Stats SA has got a national index. That's what we show the year-on-year change of the national index in apartment rentals in South Africa. That's the green line. You can see since 2022, there's been steady upturn in the rentals. Now remember, 2022, there was another war that started. Which one?
Ukraine.
Or the Russia-Ukraine one. The oil price also spiked at that period. And then the interest rates went up after that. There was a lot of other things as well, like the grain was stuck in Ukraine, so it was the food inflation, so it was other things as well. And then interest rates increased, and then people were scared of buying properties, and then they rather chose to rent apartments, and that pushed up that rental rate. There's been a steady increase. With inflation, it came down last year, last 2 years. You can see that there's actually real growth in apartment rentals in South Africa. Cape Town is looking no surprise, but the rental growth in Cape Town is looking 7%, being quite splendid. Again, this is average for the Western Cape. Individual, there would have been gains, some of the properties double digits for sure, but the average growth in the Western Cape was 7%. In Mpumalanga, that's what I'm saying, all these small provinces, sometimes they come in and they go out again. But Mpumalanga was second best. But notice most of the other provinces, either the rent is going at inflation or under inflation. I know, for example, the Free State, because you need to look at the relative. Cape Town is the most expensive province in South Africa. The Free State was the least expensive one. So always when you look at this data, sometimes the other economists will listen to other economists. Always look at a relative level where that increases are coming from. Because if you're coming from a Free State level, you're getting a 20% growth. The rental level is not, it's changing, but it's not such a big absolute level of increase. The same thing like when China was starting off with its growth. It had huge percentages, but the absolute level was smaller. Until now, last few years, I think since the 2020s and so, the actual growth levels of China is a lot smaller, but because their base was so high after all of that growth. Okay, important thing to remember. Yeah, and then rentals per province. This is an interesting one. You would expect Gauteng to be the lowest and Western Cape to be the highest, given what the other people also said. But KwaZulu-Natal is the other big province of South Africa. You all know that. And the rental level of KwaZulu-Natal is in between Gauteng and the Western Cape. KwaZulu-Natal's got a lot of opportunity. I don't know when last you've been in the south, or when holidaying in the south of KwaZulu-Natal, and the apartment prices there is very low, and the houses. And you can get apartments for 500,000, Margate, Ramsgate, those areas. But again, there's not airports, and you invest from the Western Cape, you have to fly north and then drive. So if you want to renovate the project, it creates admin, a lot of admin, and costs. So there is opportunities, numerous examples of this, where they would be outside of the Western Cape, but you need to factor in a government. Do you want to battle fighting over your municipal account? Potholes, now you get a pothole, now the tire must be replaced. Now you need to check everywhere where riots is. You know, that kind of thing. Do you want to sit with that? That is the question you need to ask. If South Africa really improves, I mean, a lot of people can make money if they invest in those rundown cities. Eastern Cape is another example where I spoke to another guy, phoned me, but he said the Eastern Cape was a lot of opportunity again now, because also it's a very bad situation with the government there, and it's falling apart, people moving out, but the prices are very affordable. And there's a chance that the government might change with the elections. So that's definitely one to watch, especially if you're in the Kuga, it's got DA already, and it's just one up. So you need to ask your question, do you want to take that risk? The levels are good. It's a bit different because I invest in the stock markets, and sometimes you get good companies where the share price falls a lot, and then you say, okay, it's a buying opportunity, people are selling. It could be like a ShopRite. In this case, your ShopRite checkers could be the Cape Town. Okay, I didn't prepare this, but I think that's really quite nice. So, the ShopRite checkers is your Western Cape, that's doing well, it's investing, expanding all these nice new shops, you can get everything you want. But your other retailers, like your Spars and your Surprise, it's a very low prices. The share prices are tanked, but people are not buying them because of all that risk. And that's where the other provinces are. There's a lot of risk. So you need to do a lot of research and think which place you invest. Do you want to venture outside the Western Cape? I think some of you have done that. Okay, but let's go on. Cape Town apartment vacancies. Very low, 1 to 3%. And you can see how high it actually was. Quite ridiculous. So, what I want to tell you about the apartments is that, okay, personally, I found if you buy an apartment, it's a 1 and 2 bedroom apartment, your comparison to your bond, what the bond you're paying is a lot smaller. When you venture outside of that 3-4 bedrooms, then it gets more difficult, especially on houses as well. So you need to ask yourself, do I want to take that cash flow hit if you buy a more higher value property? Again, some of the things I'm telling you might be obvious to you, but for others not. So, but if you're buying a high value property, that difference to your bond rate, it's different. I spoke to a guy, actually a doctor, he's very keen on George. He told me that was on the flight to Cape Town. He told me that he's very positive about one of these estates in George, because he says he'll take the cash flow hit for the next few years in buying a high value property if it's bonded. But he says over 20 years, probably if you take inflation into account, that property value and capital growth is going to be significantly more. So that's an interesting one. You can all have your opinions on that one. But and I want to get to multifamily housing. I'll end up with this. So multifamily housing is an asset class in South Africa that's getting a lot of attention. It's very big in Johannesburg. It's about 75% of multifamily apartments as an invested class is located in Johannesburg, and then only 3% in Cape Town. Multifamily housing is big estates and complexes that's owned by a single landlord. So it's very big companies. They own like 5,000 to 10,000 apartments, and we included them in the Rode sample now. We cover about 80,000 apartments on a quarterly basis. We track what's going to be cap rates, the vacancy rates, and that. And it's growing because there's more companies coming on board with this. The multifamily housing as an asset class overseas is actually very big in America and Canada and these places. So what did, in January I spoke at one of these events in Johannesburg where it was an old retirement home that one of these companies, Africa, they bought it and then they totally refurbished the building and then they made it into housing for people. But it will blow your mind when you're there. They've got swimming, there's swimming pools, there's a cinema room. There's literally a cinema room in the complex. You can just go in there and you plug your laptop in like this and you can watch a movie, or you can watch a Springboks All Blacks game for free. It's there. Your Wi-Fi is free. I'm talking about places where the rent is only like it's 8,000 rand per 2 bedroom. And then some of them has got paddle courts, like a tour and waterfall in Midrand, where they've got paddle courts. They got restaurants on site. But the big thing that struck me was that there's on-site maintenance teams there. So it's like this estate's got an office administration building there, but they've got people sitting there. So if you've got a maintenance query, a user burst, or a query on your bills, you just call them. Even if you go into an apartment, again, some of these things might be in Cape Town, but there's a barcode that you scan there in your room, and it goes to a WhatsApp link, and it goes to the person that needs to handle that query. So it's a next level of thinking, but these big investors are coming in and they're buying these estates. There's some of them already in Cape Town in the CBD. It's an apartment block that Diversity is one of the other big players. Carl Kleinans is the CEO, and there's other one in Woodstock they're also starting, and in House with the two S's. They're very big in Gauteng. They've also got a property now in Somerset West. So is an asset class, people are getting into that, and especially with the housing shortage, they're providing more affordable rentals, and the mind shift, what I've seen there is like a lot of people are just renting, they're not buying in Johannesburg with that model, because they get the rent and then all of these things for free. So it's very difficult for someone then to compete. If someone owns one or 3 apartments, to compete at that level, because think about marketing. It's easier if you own a whole place. So in the Rota report, we've actually got a dedicated section on this multifamily housing, on the SAMRA specifically. On the SAMRA is I don't even say what it means, but they're the sort of the South African Multifamily Association, and that sort of the governing body, and you can become a member of that. So we compare the SAMRA apartments then to the non-SAMRA apartments in the Rota report. You sort of get that picture of what's the vacancy rates comparison. And if you look at Johannesburg, it's actually quite a big difference what the SAMRA vacancy rates and the non-SAMRA apartments. Yeah, so that's just a side thing. It's still a small thing in Cape Town, but what's news on that is definitely a lot more coming from those type of developments. On the conclusion, the first point there, that the GDP growth forecast that's been downgraded for this year, the average downgrade is about 0.4%. So we're still looking at growth of about 1%, so it's maybe above that for this year. And then, as I said, inflation is going up because of that fuel. Your interest rate's probably moving sideways or hiking. Rate cuts, that door is closed, but it will return again when all of this settles. We'll start talking again about the cycle resuming what should have been this year. Okay, and then the short-term negative sentiment that creates buying opportunities with the risk averse. And then clearly from all the data, the Cape Town property market, that chart, guys, remember the chart, Cape Town will say the red line, most of them. And the medium-term prospects is that Cape Town, Western Cape's got a differential where they're outgrowing the rest of South Africa. And we've got these things that are working for this province. And that most likely will continue. The biggest risk for me is that government situation, if government changes. But understanding, actually, the province is doing fantastically, and we're moving in the right direction. Okay, that's all from me. Thank you very much.